Hello, chart watchers, and welcome to this Tuesday, March 12th, 2019 Market Watchers live show with your host, Tom Bowley and Erin Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. All right, well, not a bad day considering we had such big gains yesterday. We're actually extending the gains on most of the indices, with the Dow Jones Industrial Average being the exception, down 52 points. The S&P 500 up 13. The NASDAQ up another 48 after a huge 2% gain on Monday. The Russell 2000 up another 4 points. 10-year Treasury yield continues to hover near the recent lows, though. Last 6 to 7 weeks, we have not broken that 2.63% area, but we are right there again today. So we are close on the cusp perhaps of a breakdown. Volatility index continues to drift lower after being above 18 back at the end of last week. You can see it is back down, challenging the recent lows. That is a bullish development for the market. Energy continues to perform well off of the low that we saw on Friday. Nice move again today. And really, energy and technology just switching spots today. Yesterday, technology led. Energy was a bit behind. Today, it is the opposite. Down on the bottom end of the spectrum, though, not participating, industrials. And the answer is pretty clear. Aerospace having another rough day today because of Boeing. You can see yesterday Boeing opened lower and then traded up throughout much of the day, but it did gap down again today and has continued moving lower, testing yesterday's open, which I would keep an eye on. One of the best performers in the S&P 500 today is Chipotle. They came out and announced a national rewards program and teamed up with Venmo, I think, which is the digital wallet company, and CMG having a really nice day today, up close to 3%, maybe about 2 3/4 or so. All right, Erin, it is Tuesday. What you up to today?
Well, probably unpacking some more.
That's going to go on for a while.
It truly is. There's a lot of work to do, but you know, it's great being in a new house. It's a little bit bigger and the views are very nice, and I love my new office. So
got all that going for you.
Exactly.
You're closer to your parents. You're closer to your parents.
Yes, I am about 5 minutes away. So I'm really enjoying it because I have somebody to talk to about the market face to face.
You don't have to go very far to do it.
No, exactly. Carl's always happy to talk about the market with me. So it's great to be able to do that.
Yep. And we do have a special guest with us today, David Keller. Dave, how are you doing today?
I'm well, Tom. Erin, how are you guys?
Great.
We're doing great. You're at the mothership. How's everything going there?
I'm having a fantastic visit to the home office here in the Pacific Northwest. Great people at stockcharts.com. It's been a real pleasure to be out here, and yeah, happy to join you guys from here.
So was the weather that bad back in Cleveland? You needed to go out to Seattle?
It's so sad that that's a huge upgrade for my weather experience, but that's the truth. It was about 10, 15 degrees when I departed Cleveland. So this feels fantastic. So I was that guy walking around in a T-shirt in the 50-degree weather while others were more reasonably dressed yesterday.
Wow. I actually am like that as well. Coming out of winter, isn't it funny? A 60-degree day in March is completely different than a 60-degree day in October.
Absolutely true. It's all relative, right?
It is, exactly. Just like the market. What's that?
Here. I'm sorry, it hasn't gotten to 70 in like weeks, so it's freezing.
Travesty.
I shouldn't be talking weather in front of Erin.
I have no tolerance.
Anyway, Dave, it's great to have you. We're going to bring you back in here in about 15 minutes or so. Interested to hear of your disciplined trading approach. I'm sure our listeners will as well.
Sounds good, Tom. Talk to you soon.
All right. Erin, let's go ahead and get this thing going.
All right. Sounds great. Okay. So tomorrow, Linda Raschke will be here. Her new book, Trading Sardines, is awesome. I've been reading it and love it. And we're going to do my workshop on Thursday because we just had to have Dave Keller on today. So we moved it to Thursday. I'll be analyzing all of the Dow 30 stocks in 30 minutes. So that should be fun. What's hot, what's not? Mary Ellen will be here as usual on Friday to do that. So great week ahead. Today is a great day ahead. We have a disciplined approach. That's what David Keller is going to be talking to us about after the news. 10 and 10. First symbol is going to be Ion Geophysical Group, IO. It was one we didn't get to yesterday in the 10 and 10. And finally, we will finish off with the scooter report, let you know what's going on with the scooters and different ways to use them. So let's go ahead and get it started. Tom, technical news and headlines.
All right, sounds good. Let's start off with some inflation data. We had the consumer price index come out earlier this morning for February and matched expectations, rising 0.2%. And then you can see the core CPI also out this morning, rising half of what was expected, rising 0.1% instead of the 0.2 that were expected. So really nothing big from in terms of the inflation front. All right, let's take a look at what's going on with the bond market as a result. As I mentioned at the top of the show, I mean, you can see this coming across here. We continue to drop down to about this 2.63% area and continue to hold. That is definitely the good news. Now, when I look back and we take a look, I'm gonna really lengthen this out. We're taking a look now at a We're taking a look at a 15-year chart, but I don't want the Dow. I want the 10-year Treasury yield. When you look at the longer term, we were in the downtrend. I believe when we came back up and took out this 3% level, that was an indication that we began to uptrend. Well, one of the things we really should do is hold the last breakout, which was at about that 2.60% area. We got down to 255 briefly at the beginning of January, rose back up, and now we're back down close to the area of this breakout, and I'd really like to see this hold. I've said many times I like the yield to be rising because it is an indication that the bond market believes that there will be economic strength ahead. That's one of the reasons why you would get out of the treasuries, and the yield would move higher as a result of that. So I'd like to see that repositioning among asset groups, moving money from treasuries over into the equity market. We're not really seeing that yet, and that is a concern of mine. As far as earnings go, we had a number of earnings that came out. So let's go over some of those. Coupa Software, nice earnings report. Decent reaction to it. We'll go over and look at that chart in a minute. Casey's had a really nice report. Unfortunately, it's in that food retail space that has not been getting its fair share of money. So it hasn't really reacted as well as maybe you might expect with a beat that big. But there's quite a few lists there, and we're going to talk about some of those here in just a moment. But first, I want to start with Casey's General Store. So I'm going to go ahead and pull that one up. And you can see that Casey's, despite that huge beat, we did not get a breakout. Stock is up 2.6%, so it's not bad, but we haven't gotten a breakout. And I think one of the problems, well, one problem was they missed on their top line. So even though they had a really good bottom line number, their top line came in $2.05 billion. The market was expecting $2.14 billion. That was a problem. But as you go down here and you look at the food retail group relative to the S&P 500, you can see that it has been downtrending now for over 4 months. And so even though you got a really nice performing stock within the group, when you have a group that's not really loved on Wall Street, it's harder to make headway to the upside. And I think that's really what Casey is struggling with right now. A couple of others, pull up Coupa Software. And this, again, is part of that software space that has been so strong. You can see software breaking out above the October high, so it already has cleared to new highs. And you can see relative to software, Coupa had a huge month in January, has been pulling back for about the last 6 weeks on a relative basis. And it is down today after earnings, but I think a lot of the solid earnings were built in here. So the stock made a huge run from $52 to almost $100. Actually, looks like maybe a little over a week ago we did hit 100, and now we're just pulling back. So I think a lot of the good news built in here. Stitch Fix. I know, Erin, this is one of the stocks you've talked about. You support this company, I understand. Is that correct?
Yes, it probably is why it's just moved up, because I scheduled a couple more deliveries.
Yeah, I don't know if you were mentioned in the earnings call, but you probably should have been, right?
Exactly.
I'm going to annotate this one real quick because I do like the gap up, but I don't like the failure if it continues to hold here. Look at that gap resistance here. Big gap down. A lot of selling began at 35. We easily had that cleared earlier today on big volume, and now we're back down there struggling with it. I like what's going on here with the stock, but if we fail on this breakout attempt today, I think it sets the stock up for a pullback. maybe back down closer to 30, which was the recent high. So I think today's close is going to be a big deal for Stitch Fix today. Kronos Worldwide. This is going to be a perfect example of why relative strength is important and why you need to be aware of it. When you look at Kronos, you can see that it's making this nice push back to the upside. And it looks okay on an absolute chart. It's trending higher, right? Well, the overall group was trending a lot higher, which means on a relative basis, Kronos really not making up a lot of ground, and it's been in a long-term downtrend. And when you look at it relative to the S&P 500, it's beginning to roll over again. And the group relative to the S&P just kind of okay. It's not a leader. So you've got a weak stock within an okay group, and now it comes out. They missed on their top line by a mile, 349.4 million versus 393.5 million. They missed on their bottom line, 21 cents versus 22 cents, and you can see that failure to move up. Earlier it was looking pretty good. Now it's back down near the low of the day. I don't know. This is a stock, again, if you look at the relative strength, I think it was telling us, it was painting a picture for us before this fundamental news came out today. Momo, one of my favorite ticker symbols. You got to like Momo as a momentum trader. How can you not like that ticker name? But you do have a big volume today and a failure right at about 37.5, which is where we failed back in early November. So I'd like to see that breakout, but the overall trend here has been pretty good. And then finally, Dick's Sporting Goods. They did only match estimates. I believe I just glanced at it, but I did see that they were going to be taking guns out of, I want to say maybe 100 or 125 stores. But again, I just read that briefly, just kind of a headline. But apparently the market doesn't like it. You can see very heavy volume, a lot of selling going on here after what was a pretty good move to the upside. Now, when we look at the relative strength, you can see that these specialty retailers, I want you to take a look at where Dick's was back in December here at about $37, right before earnings at $39. So it was up a little bit. Check out the specialty retail group, though, where it was back at the same time, around $14.25. Now it's up at $16.70. We've had a huge run and recovery in specialty retail, but over that same period, I think what's been going on under the surface is this news was getting out. And a lot of folks getting out of Dick's. You can see right here the false breakout. We came all the way back down. Stock, I don't think, looks very good at this point. I wanted to take a quick look at the bank. I wrote about the banks. I wrote about this in the in my blog earlier today, and it looks on the surface like the banks were doing okay here. I wanted to look at this relative to the S&P 500, though. So let me just get this in here and add this and make the chart just a bit bigger. You look at the banks and you say, okay, they're not doing too bad. They've come off the bottom in December, just like the overall market. But look at what's been going on relative to the S&P 500. The banks have been doing okay, but on a relative basis, they've begun dropping again after topping out in late January. And part of the problem is the 10-year Treasury yield versus the 2-year Treasury yield continues to drop and remains in this downtrend. That impacts net interest margins on banks. It obviously impacts their profits, and that's one of the reasons why we're still not seeing the banks lead. Another reason why we'd like to see that 10-year Treasury yield start to move higher to increase this spread. That would also be a big bonus to the banks. All right, Erin, I'm not going to show it here, but Apple broke out yesterday. Microsoft following suit today. Google has been doing well. 3 of the 5 FANG stocks, Netflix and Amazon, still kind of lagging a bit, but getting some leadership from some of those bigger companies as well.
Yeah, we had some upgrades, I think, on Apple and Facebook yesterday. So,
Facebook, that's right. Didn't mention Facebook, but Facebook, I think, part of that internet group that has been certainly improving, and Facebook's been trying to make a breakout around 174, 175.
All righty.
You got your upgrades, downgrades?
I do have some upgrades and downgrades for you. Let's go ahead and take a peek at those. We'll look at about 6 of them. There weren't really that many upgrades today. It was more about the downgrades. So really the question is, and usually what we do when we look at these are to see, do we agree with what's going on and see what's going on technically and whether that makes sense. So the first one is going to be Eaton Corp. And this one, KeyBank, upgraded it from a sector weight to an overweight. You know, it's at the top of a trading zone, and I have a PMO sell signal that just came in. So, you know, it was upgraded, but I would be concerned about at least maybe another test at about 78 to get the PMO out of overbought territory. It's really overbought. And the fact I got that sell signal, I have to say I wouldn't be on board with this particular upgrade for Eaton Corp. The next upgrade I want to look at is Lloyd's. And this one was upgraded by Goldman from a sell to a neutral. So not, you know, we got into the neutral territory. I like this one in that I do see a breakout in the very short term. And being a low price stock, I mean, even if you got the move to this overhead resistance level, which certainly has been posing a big problem for Lloyd's at this point, right there at about 335, it looks like. So something to consider. But even that ride up to the 335 level on a low price stock like that, that could be good. My caveat and warning would be, because just like that other one we just saw, we do have a PMO sell signal getting ready to come in. You know, maybe if we can close near the top of today's trading, which I would definitely want to see because this looks like a shooting star. So that's a bearish candlestick that's on there, I'm sure. So that would be a concern of mine too, just seeing that the momentum looks like it might be moving lower. But if we get a close up here at the top of the intraday range, we might see that PMO kiss the signal line and just start going back up again. And I think that would be very positive. So I like this one on the upgrade, but I do have some caution there based on the momentum. All right, we were talking about Boeing, and it was downgraded today by Edward Jones. Not a surprise to hear, as really Boeing's been in the news. I was watching the business channels, and all they were talking about, it seemed like, was Boeing and the recent crashes that had happened. But of course, there are a lot of interesting information coming out about that, and you know, one is that we usually require like 1,000 hours to fly as a pilot, whereas the other two that the crashes occurred in, they only have to have a couple hundred hours. So there is questions about whether it's the make of the planes or is it the operators? Is there operator error going on there? Right now I'm seeing this inside bar and I don't like that. Obviously the PMO is in free fall as well as OBV and the scooter. So it's really one of these I would keep an eye on. If it can hold support, like right here, we had this gap and we covered it yesterday. And if we could get ourselves back up there and challenge the gap we saw yesterday, you know, that would be great. But I don't think this one is ready to be, you know, picked up as, you know, a bottom opportunity, bottom fishing. All right, next downgrade. Coca-Cola was downgraded today by HSBC Securities from a buy to a hold. They are looking at, actually it says that their target is right around 50. They lowered it. So this is going into the, like I said, this is more of a neutral call by them. I do agree with the neutral. Honestly, I could see this on the upgrade list for me as a technical analyst. Look at the PMO. We're just about ready to get that buy signal. We're at the top of this trading zone. I would really want to see a breakout here, or at least that 20-day EMA holding. But I think this one honestly looks pretty good if you can get the breakout. We might be able to see that gap closed. But in any case, I think you could look for a move to that $47 range. But really, that PMO setup looks really nice. So I like Coca-Cola, even though it was downgraded. Mellanox Technologies, this one was downgraded by two different agencies, Barclays and D.A. Davidson. Both of them went to basically a buy to a neutral. The two looks, let's see, the targets right now are 125 and 128 on that neutral call. Right now, of course, you're setting yourself up for a possible island reversal. And that would be a concern of mine right here, especially on two downgrades. But really, technically, it's just very overbought. You know, we got the PMO. It was, you can see where overbought territory is typically around 6 was the last time we got it. And once we started to make that turn, really what ended up happening here, and this is something I think is interesting, and we sort of talked about this, Tom, yesterday, is that the PMO is moving lower, but we're seeing prices really maintain. And that's honestly a good thing, because it gives the PMO this opportunity to get out of overbought territory, move oversold, and then it sets itself up when we do get the buy signal, it'll come in not in overbought territory. So I like what I call a bull kiss, came down, hit that signal line and started back up. But I'd be very concerned about looking at this as a possible island, especially on the downgrade. And that is, let's see, I had TEF as well. I don't think I added it to my list, so we'll look at this very quickly. This one, pretty boring, actually. PMO's turning down below the signal line on the downgrade, went from a buy to a hold by Berenberg, but really we're just in this trading zone, and I prefer not to get involved in stocks in a trading zone, well, unless they're near the bottom of the zone, and they're right, price is right in the middle. EMAs are braiding, so this one doesn't give us enough information, in my opinion, if you were to get in. So that's all I had for the upgrades and downgrades. And here are the listings. I will have this in the MarketWatchers live recap, so you can look a little more closely. But as I said, not too many upgrades today. American Electric Power was the other one. And then there are a couple of others, to include F5 and Hewlett Packard, that were also downgraded. And that's what I have. So let's go ahead and bring Dave Keller in. I understand you're enjoying your time in Seattle, and we're so glad that you were able to come in and join us today. And I really like your topic.
Yeah, I appreciate it, guys. Good to join you. And again, it's been such a pleasure to come out. And it's my first time visiting the home office here in outside of Seattle. And boy, just a real pleasure. It's such a good group to interact with and work with. So I'm enjoying it, and certainly glad I was able to join you guys today. Well, I was talking with Chip Anderson yesterday about just some of the things that I've been writing about on my blog, Mindful Investor, and on stockcharts.com. And one of the things that I keep coming back to, one of the themes I keep coming back to, is the idea of discipline, having a disciplined investment approach, a disciplined way of making decisions. And I find that so many times, humans, by definition, by design, are very emotional, and so we are sort of predestined or pre-designed to make emotional decisions. And in many ways, that has served us very well. So what's funny is it's not a bad thing that humans are emotional. There's a lot of places where it's actually a very good thing, where we are able to make emotional decisions. And that whole, that whole decision-making process that we quickly make, the fight or flight mechanism that kicks in, the anxiety, the stress, are all driven by humans trying to survive. And so that whole emotional process is actually a good thing. The problem is it can often get in the way of a good investment decision, and that's what I want to talk about here today. So I put a poll on the page, and if you haven't seen it, I hope you'll take a look just briefly and look over there. I want you to sort of come to a true moment of self-discovery and think about your own decision making in your investment process. How emotional are you? How much do emotions play a role in your decision making? And you'll have three choices. Number one, very. In terms of how disciplined you are, I'm very disciplined, meaning I'm a robot. I have no emotions. Emotions have no place in my investment process. Choice two, somewhat. I'm somewhat disciplined, meaning I often second guess my decisions. I make good decisions, but in general, I tend to second guess them. And then the third choice would be zero. I have no discipline in my process, so I'm all over the place emotionally, and that impacts, I think, my ability to make a decision. So I hope you'll just take a moment and answer that question. Then at the end, maybe we'll circle back and see where everyone pans out. But again, we are sort of pre-designed or designed to make emotional decisions. So there are places, not just in investing, where emotions can get in the way of good decisions, right? It sort of prevents us from making a rational decision or leads us towards irrationality. And as you probably have seen if you read my blog, I often come back to the idea of aviation. I'm a student pilot, so Erin and I have about 80 hours in an airplane, so I'm not ready to fly a 737 just yet, but I'm still learning. I have a lot more to learn, as with investing probably as well. But when you're, if you think about it, any of you that have flown an airplane or that have been on an airplane and sort of see how a pilot operates it, what they don't do is, sort of get ready, get a game plan, and then walk out on the airplane, get in, fire up the propeller, fire up the engine, and then take off. There's a lot of work that goes in ahead of that. And what a lot of that is called is the pre-flight checklist or the pre-flight process. So, I've often joked that going up for a 1 hour flight is actually a 5 hour experience, and it's very front loaded because much of your time before you ever get a plane in the air is being thoroughly comfortable with how the plane is operating, where you are going to go physically and mentally, where you need to be to prepare yourself for it, thinking about emergency planning, an exit strategy, all these things that, in the case of emergency, you've already thought a couple steps ahead and you have a good game plan in place. So before you tell the tower that you're ready for takeoff, you actually have done a number of things. And and I'll show you in a minute here some of the examples of the actual checklists I would use before I'm going up in the air. But the way my wife at times has gotten a little uncomfortable with me flying around in a little airplane in windy conditions, and I've always told her, listen, honey, if you checked your car as thoroughly as I check an airplane before you would take it out, you probably wouldn't worry that much, because I'm so confident in how everything is operating, and that that I have an awareness of how to operate every little piece of the airplane. So those of you that have flown, this might look familiar, but those of you that haven't, probably next time you get on a commercial airline, or just look into the cockpit real quick, it's open, as you're boarding, and you'll see them, with paper checklists or electronic checklists, and touching a lot of knobs and, pointing things and identifying them. And that, from the most sophisticated airliners to the tiniest little, sport aircraft, you have a very thorough process of checking all the systems and, again, preparing mentally for what you're about to do. So on a Cessna 172R, which is the airplane that I've flown most of the time, which is a pretty standard sort of training airplane, single engine propeller plane. Before this is the moment in the checklist of about 100 odd, individual items that you're doing. When you get to this point, this is when you've, getting ready to actually fire up the propeller for the first time. So you've walked around the airplane, you've physically touched every piece of the plane, the rudders, the flaps, and just confirming everything is where it needs to be. And then this is the moment right before you actually fire up the propeller, which can be a little dangerous because you need to just make sure that, it's the first time you're actually making the engine work. So at this point in the checklist, the first thing you do is check the master switch, which basically just makes sure that the airplane is going to get the power it needs. You turn the beacon on, which is an emergency transmitter. You open the throttle 1/4 inch, which just giving you just a little bit of momentum. You don't really want to do anything too crazy. Mixture idle cutoff is the fuel to air mixture going into the engine, and then the fuel pump is off because you don't need it when you're priming things. And then the very next thing you do is you yell out the window, prop or something like that, and then you fire up the propeller. And if you've done the first 50 checks okay, then it comes on just as expected, and you kind of go from there. Now that is a pretty stress-free moment in your process because you're sitting on the ground. As long as there are no birds or people nearby the airplane, it's relatively safe. There's very low chance of anything happening. So let's go to maybe a more stressful moment, which is maybe more realistic for a lot of the investment decisions that you try to make. And it's funny that the physical experiences that you get in the airplane are very similar to the physical experiences you'll get when a position goes against you or the market, moves in an unexpected direction. So one of the favorite things for your flight instructor to do when you're flying around in an airplane is to yank out the throttle, meaning, just basically recreate the conditions for an engine cutout, meaning you've lost your engine. And they say, all right, you've lost your engine. What do you do? Now, I will tell you from experience, the very first time they do this, you panic and you feel your heart rate increase. You feel your heart up in your throat. You start sweating because you're like, oh my gosh, this doesn't feel good. And part of why they actually do it is so you feel the physical sensations and you learn how to minimize those, and also how to still make good, rational decisions in the face of a stressful environment. So in the case of an engine cutout with the plane that I'm talking about, it's sort of a figure 7 on the dashboard. You start with the left, go over, and then go down start at the bottom and go up into the left. And so here are the steps that you would actually take. First, you set your airspeed for maximum glide, meaning, you make sure that you can, get the airplane as far as you need. So in that airplane, it's 65 knots. Fuel shutoff valve means you basically, you might have cut fuel to the engine. You make sure that's not the case. Mixture rich, which means maximum fuel from into the engine. Fuel selector valve to both means you're bringing it from both of your wings, which is where they store the fuel. And then finally, you check the ignition. And 95% of the time, one of those 5 things will correct the issue. A lot of times, like your knee will knock the key out of the ignition and turn it off accidentally. So by following those, you're taught to sort of address it. Now, the first time I had to do this, I was shaking. I'm trying to do this, and the instructor's there to make sure I'm safe, but sort of trying to go through those steps. The very last time I remember doing this, you're sort of half yawning, okay, and you're just kind of going through the motions, but up, yep, it's fine. And the reason why they get you to that point is they want you to be able to make a decision which is not fed by emotions, but fed by rational processes, and that it's not affected by the stressful environment, the physical conditions that you're experiencing. Now, the reason why I give you a lot of detail about those things is I think as I explain that sensation of being in an airplane when your engine cuts out, you probably have experienced a similar condition if you've traded and have had a position, in the red, or you've put a position on and then the market just goes completely against it. It doesn't feel good physically. You tend to have a physical reaction to that, right? You get uncomfortable. You're sweating. You're seeing a lot of red on your screen. It doesn't feel good, but you still have to make a good investment decision, even regardless of how you're feeling. So what I coach my clients, and I spend a lot of time working with financial advisors and institutional investors, helping them make better investment decisions using charts, using visualizations. And what we always talk about is their process for making a decision using technical analysis. So just like on an airplane, you have a checklist, and that's not a suggested checklist. That's not a maybe if you think of it, you can go through these steps. That is, you have not earned the right to get this plane in the air unless you've followed these steps one by one and have physically confirmed that you've done it. So it's funny, as investors, as traders, we often consider checklists more of a nice to have, more of a guideline, and less of a, this is something I absolutely need to do. And I will tell you that when I'm coaching, novice investors or junior analysts in my former career, my former positions, I have actually physically made them write out the answers to these questions. You will answer these questions on the checklist, and then you have earned the right to tell me whether you're bullish or bearish on this chart. So what I want to do with the remainder of our time this morning is sort of share my technical checklist. This is the way that I have, over my career, developed my process for looking at a chart and coming to a decision. This is not by any means the right answer. I don't think there is a right answer. The right answer is whatever checklist is going to be in line with your process, your investment horizon, your strategy, what assets you're trading, your time horizon, all those sorts of things. So, don't take this as the right answer. This is what I found at this point to be my right answer, but I'm always trying to reevaluate it. So this is how I go about my process. When I'm looking at a chart for the first time and someone says, what do you think of Google, or what do you think of Facebook, or Johnson & Johnson, I basically bring up this checklist. And at this point, I sort of do it mentally and I go through these steps. So very quickly, and I'll talk you through each of these, and then I'll show you a couple examples using some current charts to sort of explain how we translate it. And it's funny, as you hear these steps that I'm taking, as Tom and as Erin were talking about some of the charts earlier in the show, you will find that either they articulated or that they are going through their own process, their own mental checklist for making sure that they're looking at all the inputs that they need to. So first, for me, is Dow theory. The very first thing I want to understand is, what is the price doing, right? And it's so funny. So many times we jump to an indicator or jump to volume or jump to news or something. But for me, the very first thing, before I can make any evaluation of a chart, I want to know, very simply, is this stock in an uptrend or a downtrend? And if we skip that step, we are skipping probably the most important piece of information to start with. So Dow theory, if you've studied your technical analysis, or you know charts, basically is, an uptrend is a series of higher highs and higher lows. A downtrend is a series of lower lows and lower highs. And so the idea of Dow theory is just defining, are the highs getting higher? Are the lows getting lower? And that is the first thing that we want to answer. The second thing then is looking at trend lines. So now that we've defined what the trend is actually doing, are there any lines that we can draw that will sort of quantify visually what that trend is, how quickly it is rising or how quickly it is selling off? Because that'll give us, an initial exit strategy for that current trend, or it'll tell us when that trend may be reversing, when the trend is no longer our friend. The third item for me is moving averages. So now that we've looked at the price, let's take the noise out of the picture. Let's smooth out the price, looking at a 50-day, 200-day, maybe exponential moving averages, and just try to look at the overall trend from over time, and see how that trend has evolved. Where are we at relative to where we've been historically? The fourth item in my list is pattern, right? So are there any key patterns? A head and shoulders pattern, a pennant pattern, a cup and handle, any of those things that you may have heard of. And again, just to give you some visual guidelines with which to analyze the price. The third item, support and resistance. So are we near any significant support or resistance levels? I'd include things like Fibonacci retracements in here as well, just to identify, are there any key price levels that I may want to understand? The trend reaches this price and I want to revisit it. To finish out my list, I have confirmation, and I put anything other than price itself in the confirmation category. So RSI, PPO, on-balance volume, any of those things that would help qualify or disqualify my analysis of the trend would go in that bucket number 6. And then finally, relative strength. And this is, I would argue, one of the most important things as an equity investor. And many times I've found individuals, miss this key step. Institutions are very used to it because this is how they tend to be evaluated. But you want to look at how this chart relates to all the other charts that you could be looking at. And a lot of times this will help answer the question, am I looking at the right chart in the first place? A lot of times you make a great analysis of this chart, but it turns out you're not really where the opportunity is. And that's where relative strength can tell you. If this stock the chart looks good, but it's just a market performer, there are other stocks that are probably doing much better and others that are doing much worse, and those could provide better opportunities. So this is what, and again, this is the checklist that I've evolved over my career, and it won't be the same 10 years from now, and it's different than it was 10 years ago. But it is, at this point, what I found is a great routine for me to follow. And if I answer those 7 questions effectively, I feel very comfortable at the end of that process saying, and therefore I am bullish, bearish, or neutral on this chart, or this is what I think my position should be. So with that checklist in mind, let's look at a couple different, real examples. These are charts I just took a snapshot of earlier today, and just go through this checklist together, just so you can see how we might want to go through it. And again, what I'll tell you before we get to this example is, my previous role, we actually did psychological studies. We looked at novice technical analysts, people that were just learning the toolkit, maybe just reading John Murphy's book on it, and really, really early on. So they've seen a chart before, but not very comfortable. And if you look at this chart of Alphabet here, of Google, this might be what their visual process was. And we actually wired them up and used an eye tracker device to see where they looked on the chart and how much time they spent in each location. And what a novice technical analyst did was their visuals were kind of all over the place. They would look at this entire sort of section in the top and look at all of the price, might look at the moving averages and kind of glance around it, then look down at the RSI and sort of look at the shape of this. And then they might look at the relative strength. And what we found looking at different configurations, whatever we put on the screen, that people tended to look at. But their visuals were pretty spread out, and it took them a long time. So on average, it took them a minute or two to do all the analysis. The more experienced technical analysts, these are people that had 10 to 30 plus years of experience looking at charts every day. Number one, it took them about 2 to 3 seconds to look at that same chart and make a decision. And their eyes were focused on a couple really key areas. They would first look at the price and look at this general area and see where we are relative to moving averages and support and resistance. They would glance down to the 2 indicators and look at the current levels, briefly glance to the left, and that was it. Now, it's not to imply that their process was not as rigorous. I would argue it was even more rigorous. It was just very systematic and very consistent. What was funny is when we would talk to people afterwards and say, how did you make that decision? How did you come to that decision? The novice and technical analysts would go through this extensive discussion of all these things. The more senior analysts actually would quickly say, yep, this is a buy. And then they would be able to fill in all the details. Well, here it's in an uptrend. It does this, it does this. So they were very quickly visually able to identify it. And as you get further along in your journey of understanding charts and using technical indicators, hopefully you get closer and closer to that point where a lot of this is a mental process. It's automated, it's disciplined, but it still, has some structure to it. It's not unstructured. So let's go through this checklist very quickly relative to this chart, and then we'll look at another one and just go through So the first question is Dow theory. Is this stock in an uptrend or downtrend? And following the simple Dow theory definition and the time frame, I'm showing you a 1-year daily chart of Alphabet. I'm seeing a pattern of higher highs and higher lows. So by the classic Charles Dow definition 100-odd years ago, the stock is in an uptrend, undeniable in my opinion. The second, are there any trend lines we can use to quantify that uptrend visually? So I'm connecting the low from the Christmas Eve low, which is when many stocks bottomed, as well as the overall market, connecting it to the lows in February. That lines up very well from the low a couple of days ago. And I can now track this uptrend. In an uptrend, you just need to use the lows because you want to know when the uptrend is no longer happening. So overall, I have this trend line now to visually quantify this uptrend. As long as we remain above that line, I would say we're still in an uptrend. Third, moving averages. What are the overall moving averages doing, and where are we at relative to those? Overall, I see the price is above 2 upward sloping moving averages. Ideally, it would be the price, then the 50-day, then the 200-day. But overall, the price above 2 upward sloping moving averages, I have yet to find a company that goes bankrupt with that configuration. So overall, this is pretty healthy from a moving average perspective. For this pattern, are there any key patterns we want to pay attention to? What's interesting is, I'm finding sort of this, it's not a head and shoulders pattern, but it feels bottoming to me, right? Of lower lows and then higher lows. I see that transition and breaking above, a level of resistance, maybe a big base breakout, I might call that. But I'm actually drawn to this pattern right here, which is a consolidation pattern. After a big uptrend, we have lower highs, higher lows. Anyone listening, can you remember what that pattern is called? It is a pennant pattern, right? Where you have a big uptrend and then a consolidation period. And when that breaks out, that tends to continue. And the measurement is usually that entry point kind of measures to the previous high. So overall pattern is pretty constructive. Support and resistance levels, well, we hit the Fibonacci resistance level here just above 1170. This is using the high from the end of July of last year, the low from December 24th. That was a pretty good resistance level to pay attention to. We pulled back to the 200-day moving average, and now we closed above. This is, earlier we closed above that Fibonacci level. So overall, I think we're above that resistance level. So my eye is now drawn to that next one, which I've identified with this horizontal sort of pink dashed line. Finally, confirmation. What are any indicators telling us the RSI has been sloping upwards, not yet overbought, which suggests to me that, the stock could have a little more to go. And I'm also drawn by this bullish divergence of lower lows and higher lows in the RSI. And finally, relative strength. Now I'm looking at the very bottom, looking at Alphabet versus all the other stocks in the US that might want to do, close to making a new relative high and breaking above a trend line if I connect the recent peaks. So now I have completed my checklist from is this stock going up or down, all the way to all those different pieces of evidence. Now, together we've gone through this. I think you can see that overall, in my opinion, based on my checklist, the weight of the evidence is bullish, and Alphabet is in a good uptrend until proven otherwise. Let's now look at a maybe less constructive example and go through the same checklist. This is F5 Networks, FFIV. Gap down and obviously a pretty heavy down day, which I've taken a stock that's on a pretty good downtrend as an example. But let's go through this checklist again. Don't just look at the chart and make a decision. Go through the checklist just like we did before. So first, Dow theory. What are the highs and lows doing? Here, I would argue we have a pattern of lower lows, and we are arguably now at a new closing lower low here today. And, are we making lower highs? And in this case, I think both of those are happening. So now we're in a Dow theory downtrend instead of an uptrend. What are any trend lines doing? Well, I didn't draw this trend line here, but you could see if you connected the highs, this was actually a pretty frustrating one because we broke above that trend line, but failed and came back down. And one of my mentors used to tell me that there's nothing more bearish than a failed breakout, and there's nothing more bullish than a failed breakdown. And that's sort of what we've seen, a trend line breakout that immediately reversed. You're whipsawed, you get stopped out of a long position, and now the trend line has failed. So at this point, I might take a trend line using the more recent highs to quantify this downtrend. Moving averages, I now have a stock trading below 2 downward sloping moving averages. That is the opposite of an uptrend. That's more of a downtrend. Pattern, I don't know if I really see a pattern here that I would argue. So at this point, I think it's pretty non-existent. That's one where I don't think, if you everything's a nail if you're holding a hammer. So I don't want to just look for a pattern. I want to see if something jumps out of the screen at me. I'm not necessarily seeing that here. Finally, support and resistance. This is key for F5 because I would argue we've just gotten down to these lows around 150 to 151, and a number of times that served as support. So we're right potentially at a key support level. If we break down and confirm that, I'd certainly would want to avoid it more than be there. Confirmation, what are any indicators? I'm just showing one indicator just to simplify. I would normally look at maybe some other things, but the RSI is just in the oversold region. That is a piece of information I'd want to be aware of because a number of times, obviously, the RSI becoming oversold suggests a short-term bounce potentially. Relative strength, this thing has been underperforming and has really accelerated lower as a lot of stocks have recovered while F5 has gone lower. So now I would argue the weight of the evidence in this case is more negative, right? So we have a downtrend, downward sloping trend lines below moving averages, right at support. I would say in terms of confirmation, we're right at the point where I might expect a short-term bounce, but overall, I find an underperform, and this is something I would want to avoid. So that is how you would tend to go through that process for those two charts.
Hey, Dave.
Yeah.
First of all, great. I mean, this is awesome. I think having a checklist and being disciplined is really key to being a successful investor or trader. On that FFIV chart, though, I found it was interesting when you talked about that false breakout in February, taking out that January high. It would be easy maybe to be misled and thinking, okay, this is the start of an uptrend. I definitely can see that. But as you pointed out, the relative strength in February got nowhere near where it was in January, even though we were seeing higher prices. So my interpretation of that is FFIV was being lifted by the overall market, not necessarily because it was an outperformer, because clearly it was not. So I just wanted to kind of point that out, that I think the relative strength was, it should have at least been maybe, sending off a warning sign that if that uptrend were to break, or if that breakout were to fail, that this is a stock you want to be real careful about, because it is not showing relative strength.
That is such a good catch, Tom. I love that. And as I mentioned earlier, I found so many people don't pay attention to the relative strength at their own peril. And I would say that as an equity investor, so you sort of imply this, right? A rising tide lifts all boats. And so, when the market overall improves, most stocks tend to appreciate. And so what relative strength allows you to do is identify what's really leading on the way up and what is lagging, what might just be going up and just being dragged up with everything else. So if you look at just the trend line, if you look at just price without getting that confirmation from relative strength, you might make the right call on the chart. In this case, it would have been incorrect. The trend broke down, but you might make the right call on the chart. You might be in the right place, but you'll underperform, just a passive product. You'll underperform the S&P, which is not ideally what we want to do. So looking for that confirmation of a price and relative breakout is ideal. And so a lot of times, again, when I'm working with clients, that's one of the sweet spots we look at. A price breakout confirmed by improving relative strength, breaking out in relative strength. That tells you good price, but also leadership, emerging leadership, which is what you'd want. Yeah, that's a great catch, Tom.
Thanks. Great. I want you to get back to this, because this is an awesome presentation. Yeah. But I thought, we've had so many guests on here, and I would say that there's one common denominator amongst just about everyone that comes on here, and that is everybody looks for relative strength. And I think it's so important to trading. Yes. And when you're just looking at an absolute chart, you can kind of forget about that sometimes, because the chart itself looks good. But if the overall market or that industry group is moving up, you may still have a laggard. And I think this is illustrating that point perfectly. So great job. Keep it going.
A really good point. And for those of you that are more stock charts, novices, it's super easy to do it. They designed it very well. So you just put the ticker, the colon, and then whatever you want to do it relative to. And I tend to always have it relative to the S&P, just because that's the benchmark I tend to think of mentally. That's sort of the market. But you could do this, as you suggest. You could do it relative to an ETF. You could do it relative to another stock. There are a lot of ways you can look at the relative movement of one asset versus other assets, and so think about where you might want to be able to make good comparisons. So, technology, a lot of technology charts, as you guys talked about earlier, are all starting to improve. But really, what's really working better in tech versus others? You could do versus a group. You could do a stock versus semiconductors. You could do it versus the XLK, and you'll get some really good color on leadership within a sector.
Yeah, and one last point too that I'll make. I'll let you get back to this. I know Julius de Kempenaar comes on here quite a bit. Of course, he's the creator of the RRG charts, and that's another great visual way to look at relative strength versus a certain benchmark. And I've been using it a lot more in my blogs and on the shows as I get more and more comfortable with it. But RRG is another fascinating tool here at Stock Charts.
It is, and that is probably the best thing I've seen over my career to visualize, give you the 30,000-foot view. A lot of times we miss opportunities because we're not looking at them, right? So you get the blinders on and you look at whatever chart is in front of you. And what Julius's work, the RRG, does very well is it shows you the landscape. That shows you all your available options. That's your universe, and you'll see where the outliers are. So I agree. It's a really, really well done visualization. So just to wrap up my presentation here on discipline using checklists is, one of my first mentors in the industry told me to always be a student of the markets. And with my students, when I taught technical analysis at Brandeis University, I've also lectured at Harvard. I'm actually going to Babson in Boston in a couple of weeks. And anytime I speak to students, I always tell them, one of my final arguments is always be a student of the markets. And one of the things that drew me to this profession was the fact that the first meeting I ever went to, which was an old MTA meeting in New York City, one of the most, elder statesmen in the audience raised his hand and asked a question of the presenter. And I'm thinking, wow, this is someone who's invested for, probably 50 years and he's still learning and asking questions. Like, this is a place where I could grow my entire career. And I think many of you probably listening will find that that's the case for you too. Even if it's a hobby or it's your side hustle or it's your thing that you enjoy doing, when you're not working, it's a place where you can grow personally and professionally, which I think is pretty fascinating. So when you're creating your own checklist, again, I don't want to suggest that my checklist is the answer. It's my answer, and I think you need to develop your own answer. So how do you do that? How do you develop what's on your checklist? Here are just some ideas that I've done, and that I would suggest you. Number one is look at the blogs on stockcharts.com. So I write on there, and Tom, Erin put some great content. People like Arthur Hill, Greg Schnell often will show you in, sort of under the hood on how they're coming to a decision and things that make sense to you, that resonate with you, ideas that click with you. Put that sort of, pencil that in on your checklist. And as you build it, you'll find that that is something you can always come back to. Second thing is Chart School is having great educational resources on stock charts. And I think that will help you understand some of the different indicators. And one of the most important things there is having a differentiated checklist. So if you just have a checklist with all similar indicators, you're not really doing it. You see on my checklist, they're kind of different things, and that's what's important. Stock Charts TV, things like MarketWatchers Live are fantastic. You guys do such a great job of explaining how, and just listening to how you're describing a chart, you can pick up on what your mental checklist is. And so things that, Tom, Erin, other guests are saying, I think are great to pencil in. The predefined scans. So on Stock Charts, great screening capabilities, including some scans that show you some of the signals that others have found helpful. So if you find scans that tend to surface ideas that you like, put those on your checklist. Obviously, there's tons of well-written books by a number of the contributors on Stock Charts, but elsewhere. And so ideas, examples that resonate with you, put them on your list. The most important one out of all these is your experience. And I would say, if you create a checklist today, if it's the same 5-10 years from now, you have fumbled a huge opportunity to improve and grow as an investor, as a trader. So, your checklist should be a starting point, and you're welcome to use pieces of mine as your starting point. But remember, that is a starting point, and there is no ending point. I think, people like Carl and John Murphy and Martin Pring and others that have been doing this for years and years are still sort of learning and learning from different market conditions and how they need to evolve what they're doing. So I hope this has been interesting, just to talk through, how to think about discipline. If this sort of idea, these mental blocks and mental fixes to try and help you think more clearly about your process, if this resonates with you, as I mentioned earlier, I read a blog on Stock Charts called The Mindful Investor. I try to pick apart some of these themes and on a regular basis share ideas like this to help bring more rational behavior, more discipline to your investment process. And I hope you'll check it out. And at this point, now, Tom, Erin, thanks again so much for having me on. Always a pleasure to join you guys.
Great presentation, but you can't leave yet because we have a couple questions.
Of course.
So first, the question came in, and the question was asking how critical volume is in your analysis. So when you're looking at those individual charts, say when you're looking at Google and you get the breakout, do you pay attention to volume, or are you just looking at price?
That is such a funny question, and a great question, but it's funny because Chip Anderson, the founder of StockCharts.com, asked me that exact question yesterday when we were going through a chart together, just going through some things. He's like, "Where's volume on your charts?" I'm like, "Oh man." John Murphy is cringing in New Jersey, I think. But listen, where is it in my process? I bucket volume along with where I had confirmation on my list, number 6 of the 7 steps. For me, volume is part of those. And I to be completely honest, I very rarely look at just volume. I do pay attention to on-balance volume, just as a way to smooth out the volume over time. And I'm looking for agreement or disagreement. Is a stock appreciating with appreciating volume? That would be one of the data points. So I showed a simplistic chart. In general, there are a number of indicators that I sort of consider confirmation, and volume with certain assets can be very, very helpful for sort of gauging that direction. So fair question.
All right, another question, and maybe you can bring up that Google chart again, but the question was, that was the example used, was Google. But if you did not have to buy today, if you're looking back at this chart, where would you have said the best buy signal would have been on this Google chart? I mean, obviously we have it now, but is there some point in your analysis there where you just said, hey, this is the time I should be jumping into Google?
Yeah, Tom, obviously December 24th, I picked the bottom. Wouldn't that be nice, right? If life worked like that, and it doesn't. And people that tell you that's the case, they are probably not being 100% honest with you. It is very hard to catch that sort of move. So, where would you have found it? And to be honest, when I'm coaching investors, and I do a lot of coaching advisors, just thinking about their investment process, and what I do is draw a chart like this and think, where during this period, where would you be comfortable buying the stock? Now, certain investors love buying beaten down names. They buy something like Alphabet when it is cratering. They buy when no one else would want to. And in which case, looking at something like RSI and trying to capture that might have been helpful. For me, I'm a little more patient, and I tend to be a little more conservative, and I tend to like things that have reverse. So, if you think about when would this checklist have turned more constructive, it's clearly pretty positive now because we have an established uptrend. So for me, one of the big things is when we finally started to have this higher low, the beginning of January, and then we continue to break above that next swing high. That's when something like this would pop on my radar. I probably wouldn't be comfortable buying it until we get to these points where we're breaking above Fibonacci levels. This is the level where I probably feel comfortable buying this type of stock. And if you look at the checklist, that's where some of these things would have, turned positive. We're breaking above resistance instead of just setting levels and never touching them. You're starting to find little continuation patterns, little, flag patterns as you rally and then consolidate and then keep breaking out. Starting to outperform a little bit, right? Coming in this period, and really not until the end you really see an improvement as Google's kind of rallied out there. So the checklist slowly turns positive during this period, and also breaking above the moving averages was pretty helpful. So when we finally broke above the 50-day and retested it and came off of it, those are the types of places where I'd probably feel more comfortable buying it. But your question implies a really good point, which is you should make sure that the checklist for me is good, because that's how I'm trying to be a trend follower. So I'm not going to buy until an uptrend is established. You might be more of a contrarian, in which case your checklist probably should look very different, because you're trying to capture things that are bottoming out earlier in the reversal. So make sure that it's in line with how you're trying to actually win the game.
Well, one follow-up question on this. I know it sounds crazy. Hey, buy back, at that low at December. But I think if you actually step back, and I don't know how much this is in your analysis, but if you step back and look at a weekly chart on Google, you'll see that it's been an uptrend for a long time. I mean, from a long-term perspective, somebody who's buying and holding, or certainly buying and holding until things break down on the longer-term chart, could point to the December low going back and retesting the lows we saw back in February and March of 2018. So that would still follow that support resistance that you have as number 5. So I guess to some extent, it really just depends on which chart you're looking at.
It's a really, really good point. And one thing you didn't mention, it broke right below the 1,000 level. And Alphabet, if you look over time, that psychological, big round number of 1,000 has often served as support or resistance. On the very left side of the chart I'm showing now, you see in March of 2018, same thing. It hit 1,000 from above and then turned right around. So this, it is important to know that for me, I think of this as a checklist for whatever chart you're looking at. If I'm really looking at, Alphabet and evaluating it from an investment perspective, I would start with the weekly chart. I would then look at the daily chart, and I would also look at the monthly chart and use a checklist for each of those. And so, for me, it's a weight of the evidence for the time frame you're looking at. So here I'm saying, boy, the checklist might have looked, at that point at the low in December, might have looked less positive on the daily chart, but more constructive on the weekly chart. And that actually is a really good way to think about those multiple time frames. A stronger long-term trend, but a weaker short-term trend. Maybe that's a really good time to get into it. So the checklist, in my opinion, is particular to gathering the evidence from that specific chart you're looking at. You would then look at other time frames to confirm that.
Awesome. One final question that came in. I think you just answered it, but do you always use a 1-year chart? Or you sometimes move down to, say, 3 months, 1 month, but it sounded like you do this from multiple time periods.
And again, I tend to work with longer term investors more often. So I'm working with a lot of financial advisors, RIAs, and also institutional investors as well. And so, for us, we're talking a lot about, 3, 6, 12 months down the road. So for me, your investment horizon should dictate what chart you're starting with. So for me, I always start with a 5-year weekly chart and then look at the 1-year daily chart to understand more of the tactical short-term time frame and how that combines with the longer term.
Awesome.
And I do want to mention real quickly, I asked everyone to fill out the poll, and thank you so much, everyone that responded. If you look at the results here, I'm seeing 72% are sort of in that middle bucket, somewhat disciplined, but often second guessing your own decisions. 14% of you are amazingly robotic, and have absolutely no emotions in your process, kudos to you and congratulations. And then, a number of you said, you're all over the place emotionally. So for those of you that said 0 and you're all over the place, I would strongly suggest taking some of the things we've talked about and thinking about, at least just starting with some, checklist and hand write it out. I promise you that is going to help you just internalize it and go through the motions. Those of you, and most of us are in that bucket. And I answered this poll first. I was the first respondent. And I put myself in that one because, it's funny. I'm a professional who actually has studied markets, and, I coach and I teach behavioral finance. So if anyone should be on top of these things, it's me, and I am not, because I'm a human and I'm emotional, and that I always have to think about how that's impacting it. So for most of us that are in that bucket, trust me, there's hope. And I would say using some of these checklists and maybe just refining it and having it be more of a disciplined part of your process, I think is really going to help you over time. Just help you eliminate some of those negative impacts on your decisions.
Yeah, I would say I definitely fit into with the majority. I mean, I don't know how you can. My goal, and this has been a goal of mine for like 40 years now, is to be a robot. But I haven't yet conquered it, and I don't think I ever will.
Right. Well, good luck. Good luck with that journey.
Yeah, I had to put myself in the robot one. I know that sounds crazy, but I don't feel like I often second guess my decisions. I mean, once I'm in, that's when maybe I'll start to second guess a little, because now I have to figure out when to get out. And that's when I get a little bit emotional. But getting in, I'm pretty much, it has to fulfill this, it needs to fulfill that, it needs to fulfill that, or I just don't want to get in.
Yeah.
So
I only second guess my decisions when I'm losing money.
Right. Don't we all?
Which occasionally will happen, yes. But you're right. I mean, Erin, that is where ideally you want to be. And I think that's the goal of, using stock charts and understanding this form of analysis, is getting to the point where you think of it as this, this pattern, this series of signals. Okay, I'm in, and you don't second guess it. You don't have to question that, because you're following the weight of the evidence. The problem is when you start making decisions without really thinking about the evidence and making that case, in an emotionless way. But good for you. That's where most people need to try and get closer to.
Mm-hmm.
Well, this was a sensational session. I'm going to throw the sensational word out there. That was great, Dave.
That's a rare sensational vote. I appreciate it, Tom. Listen, always a pleasure to join you guys. I enjoy participating in this and even more enjoy watching it. So thanks for what you're doing.
Oh.
And we're going to have you back soon.
Sounds great.
All right. Sounds good. Thanks again, and enjoy your stay out there in Seattle. All right, Erin, you ready?
I am ready. I know we're running a little late, so I think I'm going to pass on doing the RRG. It was really a healthy mix as far as the sectors that were requested. So I think we should just get right on to it. And our first symbol is IO.
All right, I will do my best to set a record here. IO did recently break out above prior highs, which is good. It's starting to show some relative strength versus its peers, but its peers are rolling over, and its peers relative to the S&P 500 rolling over. This is the Oil Equipment and Services Group. And so I just, I want to see some relative strength in the group. The stock is beginning to show some pretty good behavior, but this is a case where when the industry group is weak, if the stock begins to show any weakness at all, I would be out. So I've drawn some support lines in. I would certainly watch these closely. I think IO is trading really well given its industry, its peers, but the fact that it's a relative underperformer, its group is a relative underperformer, makes me a little nervous here.
All right. Let's see. The most popular in the chat room would be AT&T.
All right. The rest of these, rather than do the relative, I'm just going to go ahead and do it on a 1-year chart because I could talk about those relative charts forever. Yeah, we got some gap resistance here that I think really we need to clear. We've struggled every time we get up to this 31.25 area. You can see that false breakout at the end of February. We're coming back up again, but we still have work to do here. So I'm going to pass until we get the breakout.
All righty. Next one up is going to be CME Group, our only financial request, and it's CME.
All right. Yeah, I think some of the financials still on a relative basis struggling. This is one I don't like. This recent breakdown really needs to get back up above the point of the breakdown in order for me to even consider the stock. You can see the top here. You had resistance. You got the breakout in October with increasing volume. We did temporarily go below, but since then you can see all of these tests and holding 173 until just recently. And unlike the move that we came down one day below and then came right back up, this time we're not coming back up, and that bothers me. So we need to get back through 173 and then that 20-day moving average. I think there are better opportunities out there elsewhere.
All right, let's look at Chaparral Energy, CHAP.
Okay, I got to tell you, I'm not a fan of most energy stocks. We are trying to bounce off some support, but so far failing at the 20-day moving average. Stock having a great day today, by the way, 23%. But we've seen this before. I mean, we saw this back at the beginning of 2019, and it went up for a little bit, rolled back over, set a new low. So I think we've got some issues. The biggest number on this chart to me is the 20-day moving average, and so far we are failing there. So I'm going to pass on it for now. It's having a great day. If I was in it and having this kind of a day, I would take profits and see if we can get a close above the 20-day.
All right, next one up is U.S. Silica Holdings, our only materials request, SLCA.
All right, this is one I think the relative chart would certainly help, because I think we've got a stock that is really struggling on a relative basis. And I just know that because the stock was $34 back less than a year ago, and now we're at 15. Obviously, relative strength has been an issue. Gap resistance, we got through one day back in mid-February. We failed, went back to the 50-day. Now we're trying to get back up. I think the stock currently is in this trading range. I would either have to see it break back up above 16 or back down closer to, say, 13. Might be a buy, although relative strength probably keeps me out of this stock altogether.
All righty. We actually had 3 airline requests. I decided to pick Southwest. Apparently, they've ordered the most of those Boeing airplanes. Let's do that at LOVE, L-U-V.
Yeah, it put in, I thought, a reversing candle yesterday, and it so far is holding it. So off of the downtrend, anytime I get a downtrend that's just, day after day after day, and then you see a big red hollow candle like that, that's telling you that you're opened on the low and came back up. So it's an exhaustive type of a move to the downside. It also happened right at this key gap support level. So I would have been treating that as a bottoming candle. Today we came back down, we tested it, holding so far. I'd say if you close much below about 49.75, I would be out of the stock. But otherwise, you could take a shot here, I think.
All righty. How about we look at Centene? We haven't looked at that one in a while, CNC.
All right. Yeah, big gap up, heavier volume, failure, and coming back down again. This is another one on a relative basis. We almost went back to the December low. Market's way up from the December low. So you've got a stock here that is not performing well. It's below its 20-day moving average. This is another one that I think, at least in the near term, I couldn't even possibly consider it until it gets through that 20-day moving average. So not liking the relative weakness here as well. So I would pass.
All righty, let's look at EXR, and that is Extra Space Storage.
Pretty good looking chart. We did pull back on big volume, getting back up near resistance. I'm not going to buy it here simply because we're right up against resistance. When you look back, I could draw a line here, but then also we could probably draw another line, right about in here. We've had multiple tests up around this 99 to 101 area, and we're up there again. So the last 3 times we haven't been able to get through. Maybe this is the charm where we were able to get through and close above 101, but I need to see it first. So I like the fact that it's strengthened off of this move to the downside, but now we're right up against resistance. I'd have to see a breakout first.
All righty. 2 more to go. First Solar.
Right.
FSLR.
All right. Well, okay. Yeah, that was number 8. So this is number 9. First Solar, renewable energy has been much stronger here in 2019. And I think First Solar definitely is riding the wave. We did have a negative divergence. I won't annotate it just to save time, but we did have a negative divergence. And when we get those, that's higher price. Here's your higher price. Here is your lower PPO. And what I look for is a 50-day test, which we've gotten. And now it's starting to move back up off of it. So I think as long as it holds that low, that down around 48.5 or so, I would be looking at resistance at about 54.5. I think that's your range for now. I like the stock, but again, just like the last stock we looked at, it's right up against resistance, or a couple of stocks ago. It's right up against resistance. I'd need to see either the breakout or a retest of the recent low.
All right, and our final one, another technology stock, Western Digital, WDC.
All right, another relative laggard, another one that's struggling with some gap resistance. And so that is where it gapped down from. You can see this October gap down on massive volume. Look at where we went to. Literally right to the top of this gap resistance. That's where it had closed that prior day. And so we need a break above $54. And in the meantime, I think you've got overall a stock that continues to be a laggard on a relative basis. And that would keep me out of the stock. If there's one positive I could point out here, volume trends appear to have changed. It seems like maybe we've got a change in character here, but I think I would need that close above 54 to confirm it.
All right, and that completes the 10 and 10. Here are the symbols that Tom just annotated for you. I will have those up in the MarketWatchers Live blog. Just go to the MarketWatchers Live blog and click on it, and you'll get that live chart list right there at the top. Also, the link is in every MarketWatchers Live recap. All right, let's go ahead and move on to our final market update and see what has been going on in the market. All right, the Dow definitely suffering today in comparison to the others, likely being brought down by Boeing right now. Industrial's suffering just a little bit here, but you can see it's sitting on some support that we had back here March 7th. S&P 500, NASDAQ all riding higher, although it looks like on the S&P 500 we may have hit overhead resistance just below 2,800. S&P 400 up on the day, as well as the Russell 2000 did spend some time this morning in negative territory. TSX, Canadian markets, really moving sideways right now, but still up 21 points. Treasury yields are lower now, 2.614. And then the VIX is continuing lower. We're now under 14 as far as a reading at 1383. UUP is down about 5 cents. And you can see GLD is actually up a little. We had a nice gap in the morning, but seemed to have hit some overhead resistance, at least so far today. USO started with a nice move to the upside and has been really moving downward slowly the rest of the morning. And it is still positive. It's up 4 cents. USO is at 11.90. And finally, bonds, the 20-year Treasury bonds, TLT ETF, really taking off today. Nice rising trend in this last 10-minute bar chart. 10 minutes, we've even seen it break out above the top we saw on Friday. That's all I have for the final market update. Let's go ahead and pass it back to you, Tom.
All right. Yeah, I just wanted to bring up very quickly kind of what you referred to, Boeing. Boeing's the problem on the Dow. Here are the 10 biggest losers on the Dow, and you can see Boeing down 7.3%. And outside of United Technologies and 3M, which have, they're still under 1% losses today, really not much to the downside. This really is about Boeing. The fact that the Dow is down 104 points. I would say based on how much it's down, it's probably contributing 150 points to the Dow decline, maybe something around there. So Boeing is the problem. I wanted to just bring up the long-term chart on Boeing because while, yes, this has been a horrible week for Boeing, no doubt, and maybe things are going to get a little bit worse. I think if you're looking at it from the long-term perspective, it's a hiccup. Maybe it turns into something more than that, but at this point, technically, it's nothing more than a hiccup. This has been a great long-term performer, and I suspect when the dust settles, we'll see Boeing pick back up again to the upside.
Excellent. Okay, well, time to move on to our final segment, which is the scooter report, and I'll give it a start here, Tom.
Go right ahead.
What I did today for scooters. Now, of course, it is the stock charts technical rank. If you just go up and click on that magnifying glass and then write in SCTR, the scooter, you'll get the information on how that is calculated. But, you know, really, we're talking about relative strength here amongst its peers, each stock, and the value gives you a ranking. And that really falls into what David Keller was telling us in his checklist. The final piece is relative strength. And so for me, I always like to have the scooter on my stock charts because it does give me that relative strength visually and very quickly. So what I decided to do, this is my general PMO scan. I did comment out one of these PMO signals. I'm having it by commenting out that last one. I'm looking at PMOs that have been rising for 2 days instead of 3. And then I opted to look at scooters rather than scooters over 75, which is what I usually do. As you can see, I'm usually looking at that hot zone. Today, I decided to look at maybe some that are making their way higher, still in a good position over that 50 line, but less than 80. So it leaves us a little bit of room for growth is how I was looking at it. So I ran my scan and I got about, 57 different results. And so what I generally will do is I will save these into a chart list called Scan Dump, and then I go through that. So I'm going to show you how you can do that. And I highly recommend, if you do scans regularly, to set up a chart list like a Scan Dump. And basically, you just know that particular chart list is transient. It's never going to hold anything. You don't want to annotate a chart in there. It's just to dump your scan results in, and then you can pull out the ones you want and move them into a more serious chart list. So I ran that scan, got about 57. And then what I like to do is go to a candle glance. And I've set up my candle glance to see what I like to see on a chart. And it's very easy to do this, guys. Set up your little chart the way you want it to be in your candle glance. Set up all of the different things in the chart style, and then save that chart style as candle glance. And then every time you come to your candle glance, you're going to have exactly what you want to look at. For me, the PMO, the 20, 50, and 200-day EMAs. Those are the critical points I want to see when I'm looking at possible selections. Now I'm going to compare the scooters and that kind of thing later, but right now I just want to see which ones have the right momentum and which ones I find that look particularly interesting. And I've already been through this group, so I'm just going to go right to the ones that I liked off the bat, just by looking at the candle glance chart. And the first one is Camden Properties. And the reason I decided I wanted to include this one was because I do have a PMO. It's kind of scooping up and looks like it might be ready for a positive crossover. And this is happening right at the time we're getting a nice breakout. So let's look at that chart just a little more closely. And there you go. You can see the PMO trying to make its way up for a buy signal. Look at OBV volume. You have got a beautiful trend on volume moving up the entire time. And really, I think that's something to consider. I loved hearing that Dave Keller uses OBV when he talks about volume. A lot of people don't like it because of its simplicity. I actually like it for its simplicity. So I like the setup of the volume. Here you go with the scooter value. So I thought Camden Property looked good. CubeSmart. Now I know we looked at a storage one in the 10 and 10. And you can see with CubeSmart, we're getting ready to have a positive crossover over the PMO signal line. And you can see a short-term breakout over the intraday high we had back here at the end of February. And it looks like we certainly could make a move to that 3150 just above that. I would even look for it to move higher. So, you're on a nice rising trend. You've got a PMO that's turning up, and look at the OBV on this one, rising bottoms. That's what you want to see. And the scooter, excuse me, improving. That's what you want to see. Okay, the next one that I found, hang on, let's go back. The next one up was GLPI. And let's look at this one. And again, I like the way that the PMO is coming together. Now that I'm pulling up the chart, I'm not really thrilled with the OBV, but at the same time, you know, we're making this bottom on the OBV right about at the tops we had previously. So if we can get the volume, positive volume to keep coming in, that would negate, in my opinion, this declining trend right now in the volume, and it makes sense. Again, simplistic formula. Now you can see we were in that downtrend. We bounced off that 50-day EMA. We've made our way back above the 20, and now you have that 520-day EMA positive crossover. So I liked that particular one. One of the others was Heartland, HTLD. And this one, I believe, is, yes, an industrial. And you can see it's already been on kind of a tear here, making a nice move to the upside. And that's managed to get that PMO to decelerate. It isn't really rising just yet, but look at the volume coming in on the OBV. Would like to see a higher top, though, so something to consider, and maybe even a little bit of a pullback toward that 50 might be a good thing to look at as well. And then let's see. I had one, it's not on here anymore. When I did the sort, I was going to look at IEI, but it's no longer in there. So I'm going to skip IEI. We'll go to IVR, which was another one that came up. And again, you've got a PMO that's starting to scoop higher. You have a scooter that's slowly rising. The OBV, not the best setup, in my opinion. But again, you have this really big bar here. And what the OBV does is if you have a down day, it takes all of the volume for the day and subtracts it from the previous reading. So of course you're going to have this really big decline. But we might be making our way out. It's breaking above a short-term declining trend. And the upside potential, I think, is pretty good here on this lower price stock. You could probably look for a move up to that 1630 level on that one. And two more real quick, and then I'll pass it back to you, Tom. And one of them was actually Qualsys. Haven't looked at that one in a while. I know that was a darling of yours for a little while, Tom. And now we're starting to see some good stuff here. The PMO is starting to scoop upward on a breakout right now above those previous short-term tops. So I liked that. And, you know, there's a good chance if we can get that PMO really to start moving the way I want to see it, of closing that gap. That's what you would expect if we are looking at a, you know, a nice breakout, a continuation of that breakout, 520-day EMA positive crossover. And then finally, last one was, and it's not in here anymore either. So let's just go ahead and pick something other than SCHR, which is what I had in there originally. Let's go ahead and as I'm looking here, what looks, that's a nice breakout, but a little overbought on the PMO. Again, you can sort of see my thought processes. Let's look at Ventas. And you can see we're getting that PMO rising above the zero line is where we got that bottom, and a nice breakout from a declining trend. The scooter is looking healthy. It is actually moving up slightly here from the beginning of March, and I would be looking for a move up to that high we had back in February. So those were the ones I was looking at, Tom. What do you have as far as the scooter report? How are you going to go about this?
Well, I also did a scan, so I just have a scan up here, and essentially it was a very simple scan. I looked at New York Stock Exchange stocks that had volume, average volume greater than 200,000 shares, scooters above 75, and an RSI reading less than 50. So in other words, you're getting stocks that are among the best, among the top 25% of the stocks out there within the New York Stock Exchange, but have RSIs below 50. So they're not necessarily going to be overbought. In fact, many of these would be hopefully within buy ranges. So the results I had, and I ran this a while back, maybe about an hour or so ago, but there were 26 of them at the time. And they're in scooter order from 75 up to 99. And what I did is I just wanted to show a few of these stocks that I thought were very interesting. Brady Corp was one, BRC. I know this was a setup that you had recently. Here was a higher price, lower PPO, It's come all the way back down, basically not only to test the 50-day, but also to test price support. That breakout that it saw back in, well, it would have been about a month ago. This breakout here above the prior high around 46, the stock ran up over 48.5, has pulled back. Still, you got a PPO in positive territory, and the RSI is down in the 40 range. Notice what happened last time the RSI came down into the 40s. We made a nice move off of that. Stock ran from 43.5 to 48.5, which was more than 10%, literally in about 3 or 4 weeks. So I don't know if that's what we're going to see here, but I do think the reward to risk is much, much better now at this pullback and closer to price support and the 50-day moving average. The next stock that I thought looked interesting off of this scan, and I wouldn't be jumping into this one at this point, I would just be watching it. And I am watching it because I know that they beat on their top and bottom lines, and that's Dine Brands Global. Stock has been under a lot of pressure the last 8 days or so. Volume's been moderate, so I definitely want to watch. It lost the top of gap support. It lost its 20-day. I would be looking for a reversal maybe at the bottom of gap support. Now, I don't know that I would be jumping in. I want to see something where I can manage the risk. So I'd like to see maybe a move down to 87.5, 88 intraday. Come back up, close above this gap support, and then I can manage my risk to the downside there. Two others. One is Decker's Outdoor, DECK. After getting up over 153, you can see the huge gap up here. When it pulled back, it came back down to support around 137. And if you look at the double top over here, 137.5, today's low is 139.81. As it works its way closer and closer to this 137.5 area, you then have about $15 of potential reward, and you can keep your risk pretty low, rather minimal. And then the last one is Foot Locker, another one that beat on its top and bottom line. I did not like that candle. I believe I talked about this the day that it came out, thinking that we might get back down to test the gap support, bottom of gap support. We may be printing a hammer here today. This one is looking interesting, one that's definitely got my eye that I may jump into at some point later this afternoon. But I do like the fact it gapped up 68s, come all the way back down to 59. And it's one of those examples I know where we look at a stock and we say, oh, it's gapped up to 68. There's no way it's going to come back down to 59 or 60, 61. Well, 6-7 days later, here we are. They do come back down to support, many of them. And so this is one I think that's got my attention. All of these came off of the scan. And again, I'll pull that back up for you. Very simple scan. All I did was just put in here, make sure it was the New York Stock Exchange, 200,000 shares, scooter above 75, RSI below 50, give you stocks that are pulling back, but are among the best stocks out there. And that is one way, I think, to minimize some risk. So let's pull up our summary of the scooter report. You can see Erin's scan, my scan, and the stocks that we each went over. And that is bringing us to the end of another show, Erin.
Indeed. And I will take the scans and have those up in the MarketWatchers Live recap, because I know everybody is going to ask, hey, I want that scan.
Always. And then, the scan tool is huge. I mean, we've talked about it on here as being one of our favorite tools. Between the scan engine and the chart list, I'm not quite sure which one is the most important to me, but they're both very important and certainly worth checking out. As far as the market goes, we do have the Dow right now down 100. You can see the NASDAQ up 45, though, continuing that move that we saw yesterday. This has been a straight up move for the last 2 days. Really impressive. Almost 200 points on the NASDAQ in a day and a half.
Yeah, and actually we got a question. Tom and Erin, what is your outlook for the week of March 18th through 22nd? It's too soon for me to to tell you what I think. Honestly, I have to see a lot more evidence this week.
I would just say this. I mean, we've got to wrap up here, but I would just say that the 18th to the 24th historically is not a week that you want to be in the market. Now, I don't trade based on that. I'm just aware of it. So if the market sets up like it looks like it's toppy, just know that the historical tendencies are there as well. All right. I want to thank all of you for being with us today. Special shout out to Dave Keller for joining us. Great presentation there. Please remember to complete the survey as you exit. As a quick reminder, MarketWatchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Tuesday afternoon, everyone. We'll see you back here tomorrow. Happy trading.